Good afternoon, everybody. My name is Cindy Brief. I am the CEO of the Coral Springs Coconut Creek Regional Chamber of Commerce. Today we have Ian Berkowitz, attorney from Berkowitz Associates with us today, speaking about financing your business in a COVID-19 world through SBA programs. Welcome, Ian.
Hi, Cindy. How are you? It's good to be here.
Great to have you. So I'm going to let you take it away and we'll do our webinar, okay?
Super. Thank you. All right. So let me share. Okay. Can you see my screen? Cindy, can you see my screen?
Yes, we see it perfect.
Perfect. Okay, great. All right. All right. Well, thank you everyone for coming. I appreciate the time. And although I have a lot of information, the goal is that there are resources available. I definitely know that many of you have gone through a tremendous amount of challenges, especially economic with your businesses over the last, now it's a year, if not longer. And so I'm sure that you understand that there's constant bombarding of information from all kinds of different resources, all kinds of different places, whether it's the media, whether it's in writing. The goal of my program is to really tell you what is the correct information so that you can really get it from a good source. And I'll tell you exactly why I'm a good source. Let me, hold on a second. There we go. Okay. So my background is I'm a business and corporate attorney. I've been practicing for the last 29 years, but I'm a former attorney with the Small Business Administration. I started with them on disaster assistance relief in 1992, and then I was promoted and stayed up in Washington. I also did securities work, raising capital for businesses in the end of the late 90s, and I was also in-house counsel for a company down here in Boca. So I have both that experience in raising capital and also being on the inside of a business. I had an NPR radio show, and at the end of the day, both on debt and equity side, I've spent a substantial amount of my career putting money in businesses' pockets, both on government programs as well as financing programs and conventional lenders and even investors. So you can say that this is kind of like my area, and it's something that I've dealt with for quite some time. The main programs that we're going to talk about, and some you may have heard of certainly from the beginning, but I want to cover them from the very beginning, are in essence really 5 programs. And the 6th program that you have on the bottom on the slide, you'll be able to see, which is the SBA programs that have been around for close to 60, 70 years since the agency was created. As many of you know, this whole thing when it came to dealing with money going out to businesses, the first legislation that came out was the CARES Act. And that was commonly known as the Paycheck Protection Program or the PPP program. And that goes back to the beginning of last year. And we'll talk a little bit about that, but that was the generation, that was the genesis, so to speak, of how businesses were starting to get money in order to deal with helping them keep their businesses afloat and also their employees working. The additional program that was a non-lender program, but a direct government program from the government, and it's something that's always been around since the government has always helped in disasters, especially when it comes to dealing with hurricanes and national physical disasters, as well as economic injury, is the SBA Disaster Relief Loan, but also known as the EIDL loan, which is an economic injury disaster loan. Then towards the tail end or mid last year, the Paycheck Protection Program Flexibility Act of 2020 came into play, which basically kind of, as it says, it kind of flexed the restricted requirements under the first CARES Act, made it more flexible so that business could take advantage of longer periods of time, more benefits in order to get forgiven, the money forgiven, and it also created, I guess, an easier mechanism for people to apply for forgiveness. The most recent legislation that we saw in the end of December was called the Economic Aid and Hard-Hit Small Business, Nonprofit, and Venues Act. That's also commonly known as the Economic Aid Act. And that was the one that got signed into law in December of 2020. And we're going to talk more of that because that's the biggest thing that obviously created the second round of financing and first round of financing for businesses like the Chamber and other businesses. Then we have the most recent Consolidated Appropriations Act of 2021, which really just cleaned up some of the stuff in the Flexibility Act and the Economic Aid Act. And then finally, we'll cover the 7A and 504 financing programs, which are really the two flagship programs. They are government guaranteed lender programs that go through local banks. And those local banks are the ones that administer these programs day in and day out. So let's talk specifically about what is or isn't correct when it comes to dealing with some of this legislation. The myth number one that I hear all the time that I think is beneficial for us to touch base is that the PPP loan only supported large corporations and not small businesses. And without getting political and without getting into doing anything to trash the media or what they say or what they do, suffice to say that the statistics don't lie. And the fact is that the PPP loan program truly did support small businesses and not large businesses. How do we know that? Well, we definitely know that some of the large businesses or the larger businesses took advantage of it. And those were the ones that you saw in the news. And most often when they were, so to speak, outed by the media, they gave the money back. But let's look at the statistics. Of the businesses that received PPP loans, 75% have 9 or fewer employees. Those would be considered your small businesses. And of course, many of you that are members of the Chamber. In addition, 87% of the loans, or 9 out of the 10, were 150,000 or less. So when you really think about it, when the amounts of money that went towards employees, and it was a calculation of what your average payroll was times 2.5%, times 2.5, and it went to 9 or fewer employees, an overwhelming amount of the money was really given to sustain employee retention, sustain businesses from keeping open, and went to small businesses. And this was an interesting thing. It said not a single eligible independent contractor, sole proprietor, or small business that applied for a PPP loan and was approved closed. Whether it employed hundreds of workers or a single, was precluded from receiving one due to lack of funding. The fact of the matter is that, you know, in the very beginning, and even now, we're getting to the situation where people think that, you know, you're going to get shut out, you're not going to be able to apply and get the money, you're not going to be able to, there's not going to be money left. And as a matter of fact, the last statistic kind of shows that, is that when the PPP loan program closed in August, there was still $130 billion in available funding that went unclaimed. So the fact is that people need to apply. And if you didn't apply the first round and you have sustained problems and issues economically with your business, you really should be applying in the second round so that you can really get the benefit. The issue of them running out of money is not going to be one, but the timing of when you put your application in will be a big one. The second myth that I kind of want to clarify is PPP did not support workers. Well, by its name in general, the PPP loan program was payroll protection program, which in essence was designed so that employers can keep payroll going for their employees. And for most of you as a small business owner, and even if you're a medium-sized business owner, your employees could be probably your largest line item when it comes to dealing with an expense. And the fact that the government was giving you an opportunity to get money and then have that forgiven, so that that money in essence went from you and through you to your employees so that you can retain them and keep them on payroll and make sure that they continue to get benefits while you may or may not have even been able to operate, or let alone we're operating at a substantially lower revenue volume. That's really the goal of the program. And PPP supported more than 51 million American jobs and accounted for more than 80% of the small business payroll in the US. Most of you probably do know that small businesses employ a substantial majority of the employees that are working in the United States. Large businesses may have large numbers, but in the aggregate, they are not the largest employer. It's the small businesses. And so that's really where the numbers lie, and that's really what the statistics say. And PPP still is the largest contribution of economic recovery. I can only tell you, with a new administration coming in and with priority being getting money as well as support to keep and sustain and keep businesses open, it will still continue to grow. So let's talk about the programs. The first program, as you probably all know, although it seems like a long time ago, was the CARES Act, the Coronavirus Relief and Economic Security Act. And that was a $2 trillion emergency program. Again, when it came out, it was primarily dealt with making sure that payroll can be paid to employees. It was made sure that at least certain things, the doors can be kept open, rent can be paid, utilities can be paid, and employees were able to deal with getting money. So that was really the goal of the first part of this entire relief for businesses. Then the Flexibility Act did what, in essence, what they didn't contemplate or what they learned needed to be dealt with after the CARES Act was put into place, and it really cleaned it up. So for example, instead of a 2-year maturity, if in the event that there were expenses that you used it for that were not forgiven or not forgivable expenses, it went from 2 years to 5 years. It also extended the covered period, which was originally 8 weeks that you needed to spend the money for it to be forgiven, and it went to 24 weeks. It also extended the timeline to rehire employees. If you remember, in the very beginning, you needed to rehire employees by a certain period of time, and under the Flexibility Act, it extended it through the end of December of 2020. It also extended the loan deferral period. Any existing SBA loans were deferred, and it also allowed for some additional extensions to move forward in that way. The biggest thing, which I think a lot of people really appreciated, is that it allowed for the payroll allocation to go down to 60%, because if you recall, there were a lot of other benefits, such as unemployment comp, and businesses that just couldn't even sustain a payroll because obviously they couldn't operate, especially in the hospitality and the restaurant business. They were closed, they couldn't operate, so they didn't really have that payroll expense, and it allowed for the forgiveness amount to go down for payroll to 60%. It also dealt with employer tax deferral through 2022, and it also created a safe harbor. So these were all things that I think were great benefits. And like any legislation that comes out, there are always follow-up legislations to tweak it once they realize and Congress gets to know what's beneficial and not beneficial, or what else they need to do to tighten up the requirements or make it a little bit more user-friendly. The last thing that you saw, and we just realized, is the, let me just pop this down. Okay. The last one that we recently had, and what you're really dealing now, which is commonly referred to as the second draw, is the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act. And it's commonly referred to as the Economic Aid Act. This went through in December 27th of 2020. And what it did is it provided another $284 billion to be utilized solely in second round. And within that $284 billion was many types of specific allocations for women-owned businesses, for minority-owned businesses, for businesses that are in what we call challenged areas or hub zone areas or economically stressed areas. It also allowed for, again, the second draw. What it basically said is that, listen, if there were people that had gotten first round and still need to be able to cover expenses because they're not operating at a full level, or their employees are still needing some additional benefits, it allows for them, if you did receive a first round, to go back and get a second round. It also allowed for businesses that were not eligible, that were 501c6s like the chamber and bar associations, to go back in and now do a first round financing because they were ineligible the last time. Same thing that it does is that you apply directly to a lender. It is not an SBA application program. It's a program that you go through with your lender. And right now, the time period of which you can apply for a second draw is through March 31st, 2021. Now, just like you did under the first program, they took a look at your payroll from 2019 and then took the average 12 months, multiplied that by 2.5. That's how they're going to be calculating it for your 2020. They're going to look at your 2020 payroll. They're going to calculate it, and that will be the amount that you're going to be eligible for based upon your payroll, as well as all your employee benefits to come up with that number. And then, of course, it's a 100% guarantee from the agency to the loans. The way that these programs work is that you apply to the lender, no different in the first round. You apply to the lender reviews, the lender approves, the lender gets the SBA to as well give an approval, and then the lender actually lends you the money. It is different than the EIDL loan program in that the lender lends you the money. At the time that the forgiveness is then applied for and then forgiven, at that point in time, that's when the lender gets the money from the government when it's been forgiven, and the lender gets that money back and puts it into their pocket, having lent you. Now, the one big thing related to dealing with the second round is that to be eligible, you need to have used all or will use the amount that that in essence you got in your first round. So if the idea is that you've taken the money, stuck it into an investment account and have not used it, then you do have to certify that you will be using that amount and it be used for its intended purpose in order for, let alone for it to be forgiven. Let's go to the next slide. Oops. Okay. The specifics of the program is that the first round had no more than 500 employees. That's been reduced. So now it's been reduced down to 300 employees. However, the big caveat in this, as opposed to the prior program, is that you have to show that your gross revenue income between 2019 as compared to 2020, not for the annual, but for any quarter. So if you have 4 quarters, you basically go through and you compare Q1, Q2, Q3, and Q4 of your 2019 numbers to your 2020 numbers. If any of those quarters show a 25% reduction, you're now eligible for the second round of PPP, or first round if in the event that you were ineligible for the first round. First-time applicants who didn't otherwise apply or who were ineligible, of course, they're going to apply, but they also have the same requirements of having less than 300 employees and show a 25% reduction. Again, the guarantee percentage is 100% to the lender when it's forgiven. There is no collateral that's required. There's no personal guarantees that are required. And if there is a portion of the proceeds that are not forgiven, the interest rate is 1%. Non-compounding, non-adjustable, and the maturity is now 5 years as opposed to the original 2 years. All loans, again, for this program are processed through private lenders, and most often everything is dealt with via certification. The beauty of it is most of the lenders have an online process. The actual physical paperwork is actually submitted to the agency, but it's based upon the portals of most of the lenders having dealt with setting up, and once those portals are open, it produces a document that gets utilized by the bank and that goes to the agency. But everything runs through the agency. Everything runs, through the bank, and the bank is the one that makes the applications to the SBA and will approve it. Let's talk about some specific additional things that the economic aid added. Beforehand, primarily, the forgivable expenses were payroll costs, including any kind of payroll benefit, which would include medical, dental, health, 401k, in addition to utility payments, in addition to rent or mortgage interest. Now, under the new act, they've also expanded the utilization of the proceeds for forgiveness to operational expenses, software, cloud computing, and other human resources and accounting needs. Property damage is actually included. Usually under SBA SBA disaster loan, That's where you generally see property damage. That's generally if a hurricane comes through South Florida, or a flood, or fires on the West Coast. That is generally a SBA direct program where property damage was included, and it's a loan program. In this case, they said, listen, there were a lot of civil discourse that happened, whether it's things that happened on the Capitol and your business got destroyed, or even during a lot of the Black Lives Matter issues that happened, whether it was in Minneapolis or any of these other places. And so now if you can show that your business was damaged based upon those things, you can utilize that money for repair and get that forgiven. Supplier cost, if you had contract and purchase orders, or your business that had perishable goods and you need to keep things in supply, those are now forgivable expenses. And other worker protections, such as buying and dealing with PPE for your employees, as well as potentially putting, as you know, these plastic and lucite, dealing with masks, having liquid so that people can sanitize. All of that kind of stuff is now included. The covered period, remember beforehand under flexibility, expanded from 8 to 24 weeks. Now the borrower will be able to establish the period of time and the covered period of time anytime between 8 and 24 weeks. There's a simplified application for any loan up to 150,000. And for businesses in the accommodation and food service industry, there is now a bigger amount that they're eligible for. All businesses that are not in the NAICS Code 72, which is accommodation and food services, it's going to be still the same 2.5 times the average monthly payroll for the prior calendar year. And if you're in that special NAICS Code of 72, it's 3.5 times. And we'll go through, I've got a slide in here that talks about what is a business in the NAICS Code 72. Under existing 7A 504 and microloan borrowers, they are now getting 3 months of principal and interest payments beginning in February of this year on their loans. And certain industries such as hospitality, personal services, they could deal with payments on their loan, their existing SBA loans, for an additional 5 months afterwards. Then there's also on new loans, and we're going to talk about SBA programs, the standard SBA programs to be utilized in order to deal with working capital and expand your business beyond the PPP money. But the beauty of that program now is that borrowers will receive 6 months of principal and interest payments to cover them once you close on a loan. So if you have a SBA loan through a lender and you're going to do a 7A loan program, and that loan is going to close in March, or April, then the first 6 months of those payments, up to $9,000 per month, will be covered under this legislation, which means that the max, and the beauty of it is that if you've got a loan, you're in essence getting $9,000 a month for the next 6 months to cover your expenses and your payments. And to be frank with you, I don't know any lender that's offering that, so it's a great program, and it's something that you should consider. And the last great benefit is that all of the borrower and lender fees and SBA fees that would generally be charged by the agency on an SBA loan program is now being waived. These, for some of you who have friends and business owners in these industries, as I mentioned to you, the calculation for what they're eligible for under the SBA second round program at 3.5 times their payroll and their employee benefits is now for all of these types of businesses: hotel, motels, anything in food service, bars, caterers, mobile food, mobile trucks, snacks. I mean, any of these kinds of businesses are now eligible on 3.5 times their average monthly payroll, as opposed to the 2.5 times. This is just a slide that really goes through, in essence, how and what you can potentially be eligible for and what you can get. And on the top part of it is the PPP applicant, the shuttered venue operators grant applicant, which we'll talk about, and then the COVID-19 EIDL applicant. And on the left side, you'll see the recipient. And it basically talks, so if you're looking at the slide, it basically says that the PPP applicant and the PPP recipient, as long as they have the first draw, they can apply for a second draw of PPP loans. Okay, so on the COVID EIDL side, for example, if you are a PPP recipient and you're also an EIDL applicant, you can apply for EIDL, but you cannot use the money for the same purposes. Now that we know that under the most recent Economic Aid Act has expanded the use, you use the EIDL money for what it's supposed to be used for, and you could use the PPP money for different expenses as well. The statistics. As of February 7th, 2021, on all SBA PPP lending, there have been 6,438,379 loans approved, and the total net dollars going to businesses has been $623,400,743,502 distributed. As far as the PPP loan in 2021, which we're only talking about 5.5 to 6 weeks, there's been over 1,290,778, and over $100 billion that have been distributed already. I wanted you to see this slide because, again, I know that there's this fear factor that people have, like they did in the beginning of the SBA loan frenzy when the CARES Act first went into play, and also the second round of PPP loans. There is, again, almost $300 billion that have been allocated for under this new act. And so right now, only $100 billion has been allocated. There is plenty of money that's left, and everyone should be applying for either first round or second round, certainly through the deadline of March 31st. And ultimately, I'm confident that that's going to be extended as well. Let's look at, in essence, what the statistics are for just this year. Out of the first draw loans, there have been an additional 357,923 that have been approved, and about $7.5 billion that have gone out, with an average loan size of $21,134. Again, this statistic kind of shows you that on first draw loans for this year, the average size is a small size, so it's going to the smaller businesses. First draw loans with 10 or fewer employees, out of that 357,000, 348,000, are for a total of 5.3 billion, with an average loan size of 15,320. And then first draw loans less than 250,000. It's approximately 70,231. On the second draw loans, which have been the one under the new act, the statistics are substantially higher. And obviously, it looks like those people that have applied the first round realize that they really want to get as much as they can the second round. On the second draw loans, there have been almost 933 million loans approved. On second draw loans with 10 or fewer employees, 684,000. And on second draw loans less than 250, that's 190,000. But look at the numbers. On the second draw loans, of the loans that have been approved, almost $94 billion has already been dealt with on an average loan size of $100,000. So you're starting to see the capability of people that have gotten the original loan, and now they're going to be dealing with a second loan. And it just looks like people are really understanding and taking advantage of both PPP benefits, both the first draw as well as the second draw. Let's talk about, the approvals. As we talked about beforehand, this is the types of lenders that are going to be, that have dealt with the loans. First and second draw loans are basically your large banks, and then PPP loans by community financial institutions is a smaller percentage. by just deposited banks of less than 10 billion in assets is a smaller number, credit unions as well as a smaller number, and then farm credit systems is a smaller number. But suffice to say that you're still seeing a substantial amount of alternative banks and alternative lenders that are available to deal with PPP loans. Loan sizes. This is really a slide really tells you where the money is going when it comes to dealing with the size of the businesses that are able to take advantage. And again, almost 900,000 loans equaling about $16 billion, or almost 70%, is going to loan sizes of 50,000 and under. 50,000 to 100 is still at 162,000, and that's another 11.5 billion. So just between 100,000 and under, you're seeing basically 81% of the money that's going to those loans at that loan size. Again, confirming that it's going to small businesses that are able to utilize the money and be able to make sure that they can sustain their businesses and put money in their employees' pockets. Even if you deal with loan sizes of under 350,000, you're adding another 12.5% or 13%. And so that takes us to almost 94.5 to 95% of those loans are under 350,000. And at the end of the day, that is a substantial amount of money going to small businesses and even medium-sized businesses. But the statistic on the bottom is really telling it all. The overall loan size is approximately $78,000. How is it being broken out into gender as well as ethnicity? The interesting statistic on this is the unknown or not stated is the largest by far. I guess people didn't want to identify whether or not they were male and female. So that's the largest amount, almost $99 billion went to that. However, you see underneath, same thing, unanswered, they didn't want to identify, and you're not required to, which is probably why you didn't see a lot of people identify whether they were male, female, and whether or not culturally, where they were culturally as far as their ethnicity. But, you know, I suspect that most people generally don't fill those kinds of things out because they're a little concerned about identifying themselves in a certain way. I can guarantee you and tell you, being a former government attorney, that you know, the government doesn't really track those things as much as you think it does, but nonetheless, everyone has the right to be able to answer or not answer. It's all voluntary. The statistics as far as the areas, the accommodations and food service is the top, construction afterwards, manufacturing, and then professional, scientific, and technical services, and then healthcare and social assistance. These are statistics, in essence, for 2021 only, and certainly not for the entire PPP loan, but this is to date from January 1st through, I guess, today's date, February 16th. California has closed the largest amount of 31,981 for about 3.4 billion. Second largest is Illinois, which was not in the top 3 or 5 on the first round, but certainly they stepped up their game and more businesses applied then at 27,595 applications for about almost 2.7 billion. And then Texas, Texas I had twice, I see, but Texas closed at 25,773 for 2.4, and Florida is always up there at 19,425 loans for a total amount of $1.5 billion. Again, average loan size, if you look at the statistics, let me go back. If you look at the statistics, a overwhelming majority, close to $5 billion or $4.9 billion is 50,000 or less. And then between 50 to 100 is an additional $4 billion. So again, the larger amounts or the largest amount of money that's going out on the street is really under 350, but an overwhelming majority is at 100,000 or less, which really cuts to the heart of the needs of the smaller businesses that have 5, 6, 7, 8 employees, you know, and has payroll and they kind of need that money to sustain themselves. That's really where most of the money is going. Let's talk a little bit about the economic injury disaster loan or the EIDL. EIDL loan, you can get up to $200,000. The interest rate, it is not a forgivable loan, but it's payable over a 30-year term at 3.75%. Organizations like the Chamber, as well as bar associations, are at 2.75%. And again, it's meant to retain employees, rehire workers, restore pay, and provide for operating expenses with all of the new things that was added under the Economic Aid Act. There is an online streamlined application process. To be honest with you, it's an electronic, you fill everything out online. It's a very simple plug in numbers, tell us about your business. They verify who you are, they approve an amount, and then the money gets deposited directly from the government. Just to clarify, applications are still being taken in. Borrowers can apply for both PPP and EIDL, and most people do. But you need to make sure that the money is really used separately. So when you're dealing with, what you should be applying for forgiveness and how that money is spent, you should be putting down on your forgiveness applications things that were eligible under the forgiveness program, and then everything else that you use the money for that was not necessarily eligible, you should be utilizing your EIDL money for that as well. And the last thing is, under the Economic Aid Act enacted recently, it did repeal the requirement for the advance to be subtracted from the PPP loan forgiveness. This is really applicable for people that are applied the first round. And if you remember, when you were putting in for forgiveness, if you got a grant, they in essence found that to be chargeable to you, so to speak, even though it was a grant. And again, the Economic Aid Act cleaned up that loophole, so to speak. Right now, as of January 31st, 2021, SBA EIDL loans were approximately 3.7 million loans have been approved. Total loans, total funds that have been allocated and distributed is just under $200 billion. And the application deadline now has been extended to the end of 2021. So if you have not gotten a EIDL loan and you think that you have the ability to utilize it, I can tell you that, being able to get money for your business at what we would consider to be a mortgage rate, which is very low at 3.75, let alone payable over 30 years, I would take advantage of it. Even if you get it and you don't use it, you can return the money, but at least it gives you a cushion. It gives you a backup. And in my opinion, having enough capital to sustain and deal with your business is probably the biggest and most important thing when it comes to dealing with being a business and an entrepreneur. If you are denied, you also have 6 months after the application to file what we call a request for reconsideration. And that means that even if you were denied up at December 30th or December 31st of this year, you'll have up to 6 months to be able to file your reconsideration request to potentially get money. And I will tell you that if you have already applied for economic injury and now you're sustaining some greater losses, you have the ability to apply for more, as long as you can show and document that you've been injured substantially. So that gets back to a lot of our hospitality, personal services, gyms, those kinds of things. If you only got approved for a certain amount, you can go back and get a higher amount. And I will tell you, most often businesses are being offered up to $150,000 with very little questions asked. To give you the statistics on what SBA EIDL loans have done, California has closed a little over $500,000 for about $35 billion. Florida at about 465,000. We've done about $20.7 billion. Texas again is 317,000 for about 17 billion, and New York at around 311,000 for 18 billion. So there's still plenty of money that went out this way, and it's still a very good and viable program, albeit it's not a forgiven loan. You're still having to repay. I did want to cover why people get denied and why, in essence, if you do get denied, what you should be correcting. Number one is this: if you have unsatisfactory credit or poor credit, that could be a reason why. Or if you've ever defaulted on a government loan in the past, that could be a reason why you got denied. If you put in unverifiable information, and I see this a lot where people put in things and they don't necessarily, they typo some kind of a, either their tax ID number or maybe a birth date, and it gets in essence dealt with and kicked out. If you are an eligible non-US citizen or your business is not eligible, there are certain businesses, any investment business, speculative businesses, certain what we would call X-rated businesses are not necessarily or not eligible. And if you can't show that you've been injured, we do know that there are certain businesses that have increased. Certainly, if you were in the medical profession or you sell medical equipment and supplies, your business may not have been economically hit. So therefore, if it's not, you're not eligible. And sometimes there is a character issue. And this gets back to whether or not you've been convicted of a felony, or if there are other things that you have done with the government that would bar you from being able to receive any kind of benefit, such as a grant or a loan. If you defaulted on government loans in the past, they could be all reasons for denial, but you do have the ability to be able to show and go back and request reconsideration so that you can potentially get the benefit. This is one thing that I know has not been promoted much, and I did want to bring it to your attention. Beforehand, if you remember, on the first round of SBA Economic EIDL, there was a grant. And quite often, some of you in the very beginning may have gotten $10,000. After the second round of PPP legislation, it went down to $1,000 per employee. But there is now something called the Targeted EIDL Advance, and it's an emergency grant that provides working capital to businesses and nonprofits in low-income communities that suffered reductions of revenue of 30% or more and have 300 or more fewer employees. It is a grant program. It is targeted. It is just like the EIDL Advance. However, what they did is they narrowed the focus, and it's only for certain low-income communities. The unfortunate thing is that the SBA has not identified who those communities are at this time. And I was even checking as early as this morning to try to see whether or not there are any areas, either in Coral Springs or in Coconut Creek, that are identified as one of these low-income communities, but they have not published it. So what I will do, as long as that's something that you would want, and I'm sure you will, is I'll keep checking. And as soon as I can identify, and the agency has now identified those areas for the Targeted EIDL Advance, I'd be happy to let you all know the zip codes. And that would be something that I would definitely think that you all should be applying for, because it's in essence, again, grant money that doesn't have to be paid back, and it's really utilized as you see fit to sustain your business and make sure that you can grow and continue. The other big grant program, which was a big thing that happened in the most recent legislation, is the Shuttered Venue Operators Grant. And to be frank with you, it is probably one of the best and healthiest grant programs that we've ever seen. But as you probably know, that's an industry that got decimated. So a shuttered venue operator is defined by anyone who does kind of live operations, live music. I use it as an example, but I'm sure it's not eligible based upon, the size of their business, but something like Hard Rock, even the Coral Springs, I think the venue where the concerts are in Coral Springs would be eligible for it. It also includes agents. It includes talent agents who may deal with bookings and that type of stuff. So it is very broad. Certainly theaters like the Wick Theater up here in Boca, small venues, privately held venues, that's what this is for. But if you really look at how much they're eligible for, it's substantial. It basically takes 45% of their total revenue, of which they had received the prior year, up to $10 million, and they would be eligible to get that money as a grant with no repayment back whatsoever. It's money in their pocket for having really been shut down and not being able to operate. And it's in essence a spectacular program. So if you know anyone who has any of these types of facilities, or let alone as a talent agent that deals with booking people and these kinds of things, it is a great program. The people who can apply are live venue operators, theater producers, live performing arts organizations, museum operators, zoos, aquariums, motion picture operators, talent reps, and any business owned by an entity. So for example, if you've got children's theaters, if you have theater troupes that put on shows, they're all part of these types of this grant program, and I highly recommend that they apply for this grant program. All that they have to show is that they've been in business since February 29th of last year, and they as long as they have not applied or received a PPP loan after December 27, 2020. They could have applied and received it prior. So in 2019 and 2020, they received it, but as long as they didn't receive it in the second round, which recently went into play and didn't get any money now, they're going to be eligible for the grant, and they should certainly apply for it. It could be used for all of these things: payroll, rent, utilities, mortgage payments, scheduled debt, worker protection expenditures, independent contractors, which would be actors, so to speak, that they may employ for their venue, any kind of business expenses, administrative costs, licensing fees, taxes, leases, insurance payments. It's very broad, and the grant can be utilized. So the perfect scenarios is if you've got a small business that deals in this arena, and let's just say that they did $500,000 or $400,000 in revenue in 2019, they now have the ability of getting a check for $200,000 to $250,000 to be put in their pocket and utilized for any of these expenses as a grant with absolutely no liability or no commitment to have to repay. You could also, what you can't use it for is these types of things. You cannot just buy real estate. You can't deal with loans that went into, that originated after February 15th. You cannot make investments or make loans to other people. You can't make any political contributions. And you need to maintain the documents for approximately 4 years afterwards. So if in the event that you're audited, which is very common, if you've ever received a grant, there are requirements that you deal with that grant and how the money got spent related to that grant for multiple years afterwards. And this kind of talks again as far as the priority. They've prioritized the applications once they start taking it. Anyone who had 90% or greater revenue loss is going to be prioritized for the first 14 days. Then 70% or more loss is the next 14 days. The third priority is 25%. And then there's supplemental funding afterwards. But I can guarantee you, given that most people don't know about it and most often money just gets left, if you know of anyone who fits this eligibility, I would highly recommend that them applying, because they will definitely get it will be a nice way to put money back in their pocket from having a disastrous year. Let's talk about forgiveness for a little while, because many of you already applied, many of you were waiting to apply, and now you're doing a second round. So there's three main forms for forgiveness. One is the 3508, then there's the 3508EZ and the 3508S. In essence, all three forms were created, I guess, when they started to deal with how to apply for forgiveness, and the EZ and the S were in essence updated forms that came out afterwards when they realized that they needed to make a streamlined application, and that people that were applying for forgiveness for periods, for amounts that were really small amounts, should not have to go through much larger applications. So those are the three different forms to be utilized. In essence, the 3508 is if your loan was for $50,000 or greater, and in essence, you reduced either the salaries or the employee numbers by more than 25% during your period, okay? So that's the rule of thumb. The rule of thumb is that if there was a reduction of employees or wages of 25% or more likely than not, you're going to be using the 3508, which on its schedule on page 3, it has in essence a calculation to calculate what your reduction would be in loan forgiveness because you reduced your employees or you reduced your total payroll by a certain amount. The EZ is the same thing. if it was greater than 50,000, but if you did not reduce the annual salary or hourly wages of your employees. And so if you maintained your salaries, you maintained your employees, and you dealt with $50,000 or more, you're going to file the EZ. And in essence, if your loan was 50,000 or less, you're going to file the 3508S. And again, please remember that all forgiveness requests go to the SBA lender. It does not go to the agency. The lender will more likely than not set up a portal, send you an email to remind you to submit for your forgiveness and submit your documentation, and everything will be taken care of that way through that lender. What happens? Well, you have to have certain documents. Now, certain lenders will say, and the applications, especially on the 3508S, doesn't necessarily mean that you have to supply the documents, but most of the lenders will require it. And so these are the kinds of documents that you're going to need. You're really going to need bank account statements, your tax forms, whether it's your 940 for the quarters, or your 940 for the year end or your 941s for the quarters, any kind of state quarterly filings, payment receipts, canceled checks, anything showing that payroll was deducted and taken out of the account. On the non-payroll side, you're going to deal with business mortgage insurance payments, your business rent, leases, utility payments, operating expenses, property damage costs, supplier cost, and worker expenses. And again, those are now, because of the Economic Aid Act, expanded the uses. So now those can be included in your application for forgiveness. And on the forgiveness, the first payment for anything that is not forgiven is deferred for 6 months. But the process is that the lender has about 60 days to make a forgiveness determination. And then after that determination, the SBA has 90 days. So, which means that if you calculate the period of time, if you go the full distance from when you applied to your lender as well as to the SBA, in essence, it could potentially be up to a year from the time that you've received the money and let alone applied for forgiveness. But I will tell you, most forms, especially the S's, are really automatically forgiven. You're self-certifying that you use the proceeds correctly. So I would tell you, if your loan amount was under 50,000, more likely than not, it's going to be much faster for you to get your loan forgiven. The documents, of course, have to be maintained, but you don't have to. Different banks deal with things differently. I can tell you some of the banks that I've worked with my clients, most of them will say just upload it so that we have it just in case that there's some kind of an audit or there's, in essence, some kind of a glitch where they need to see it. But that's generally how it's going to work out for purposes of the documentation. Let's talk about some alternative programs. I did mention to you that one of the best ways now to deal with an SBA loan is through the 7(a) program. It has been around since the 1950s when the agency was created. It is the flagship lending program. It's utilized to refinance debt, acquire inventory, working capital, purchase real estate, buy a business, which, believe it or not, is a very big thing right now that people are doing, purchase furniture and fixtures. It's really utilized for anything. Very lenient underwriting criteria and credit score collateral, because the 7(a) loan program is, in essence, your rich Uncle Sam, which guarantees your loan to the lenders. Amortization schedules are 10 years. If it's real estate, it can be up to 25 years. And the rate is prime plus the max, which is 2.75%. The beauty of an SBA loan program, so that everyone truly understands, is very simple. When you go to a standard bank in what we call conventional lending, there are lots of requirements, okay, and covenants, what we call covenants, which is things that you need to do. Financial reporting, monthly financial reporting. Sometimes you can't transfer equity, you can't pay yourself a higher salary. Believe it or not, there are lenders that put those kinds of requirements on a borrower so that they'll always make sure to make their payment to the lender first. The beauty of the SBA loan program is that there are very little, if any, reporting requirements and very little covenants requiring you to do anything except for maybe an annual financial statement. And that's why the 7(a) program is a great program, especially now with the benefits. There's greater flexibility, as I mentioned. The agency generally guarantees up to 75% of the loan, that guarantee now has gone up to 90%, which means that banks are eager to utilize this program. The express loan amount, which is what I call, it's sort of like a home equity line of credit for your business. It was capped at 350,000. Now that has gone up to $1 million through October 1st, 2021. And then it increases but drops down to 500,000. So the bottom line is that this equity line of credit, so to speak, or the express loan, which is more of a line of credit, is up to $500,000 now, and that's now a permanent increase, but now up to $1 million until the beginning of October. All lender fees, as I mentioned earlier, and SBA fees are waived for all SBA loans. 3 to 8 months of principal and interest payments up to $9,000 per month are available. 3 months is for almost all businesses, and then there are certain industries that will give you an additional 5 months, such as hospitality, accommodations, personal services. The microloan program, which are generally reserved for loans of $25,000 and less, or $25,000 or less, that's been now extended from 6 years to 8 years. You can now use the 504 program to refinance existing debt, which is something that's not generally utilized. And now you can get almost up to 1 year on deferral on loan payments under SBA loans. The last thing I did want to cover is what other financing options there are. And these are the financing. The state of Florida has multiple programs. One is Rebuild Florida Business Loan Fund, the Florida Small Business Loan Program, the Black Business Loan Program, the Microfinance Guarantee Program, and then Broward County has a few additional grant programs, which basically came through the CARES Act, of which went to cities, counties, and states. And those grant programs are still available. The Broward County has the CARES Act grant program and the Small Business CARES Act program. What should you do now? Well, here's my suggestion for all of you. Number one is figure out which program works best for you. We all know that the loan program with forgiveness is certainly the best, because that just means that it's money that we get and it's going to be forgiven so long as we do our homework and make sure that we've got our documentation, our documentation and our use of proceeds are dealt with correctly. But it really is beneficial for you to make sure that you're truly looking to see what you need in the future. Listen, being a business attorney, I've been working with businesses for almost 29 years, analyzing their cash flow. What do they need? Planning, projecting. And now's the time to really do that. There's no doubt when money is not available or our revenue is not where it needs to be, we kind of know that, that's when we get very specific with our numbers. We get very knowledgeable as far as what our needs are, and we spend the time going through that. What I would tell you is make sure to identify it now. Now's the time, in essence, to get to know your numbers in your business and know exactly what you need. Once you have that and you really know what you need, then pick the program that best works. There's no doubt that it's a no-brainer to deal with applying for the PPP loan, because that's forgiven. But if you need extra money and you don't want to liquidate your assets and you don't want to pull money from other resources, and please do not use credit cards, because they are the worst when it comes to dealing with high interest rates. It just never makes sense. Take advantage of low interest, long-term programs that will put very cheap money in your pocket to deal with your business. If you have an idle loan and you want to deal with an increase, now's the time to go back and deal with it, because a 30-year amortization on an idle loan at such a low interest rate of 3.75% is really phenomenal, and it's the cheapest money that you're going to get. And if you do need money in excess of the 150,000, or you want to grow, you want to expand, you want to be able to then potentially buy another business, and because your competitor may be wobbly and in essence wants to sell because they're not able to sustain themselves, there could be great reasons to now think about expanding and growing your business. And if that's the case, then the 7A program is a phenomenal program for you to get into and think about it. I will tell you the only one big takeaway that I have for all of you today when it comes to dealing with any of the things that we talked about is there is plenty of information out there on the internet. And I think we all know that we like to think that everything that we read is correct and accurate, but a lot of the times we don't, and it's not. So I can only impress upon you, apply to and work with valid, known lenders and organizations that you know have definitely the credibility, and more importantly, that they have a personal recommendation or that you've heard that other people have used, because um, because I will tell you that there is a substantial amount of fraud going on, and based upon that fraud, there are things that are clearly being done, and lots of organizations that are reaching out to people right now that are asking and saying, apply through us and do things through us. And even myself, I get text messages from organizations telling me that I can apply for $500,000 right now. And you know what? I know better, but I would tell you, just be cautious. Make sure you know who you're applying to, because I will tell you this, when you apply, you have got to give people all of your personal information. You're giving them your social security number, your tax ID number. Sometimes you're telling them, you're sending them tax returns. That's information that you do not want to give to an organization that you don't know. I will also always make sure that if you're getting any government correspondence, that the URL and the website ends in a GOV. Okay, because I know that there are SBAloans.com and SBAloans.info and SBA.com that has nothing to do with the government, but they try to capitalize it on making you believe that they're that. So please take the time and make sure that you are working with valid organizations and that you know exactly, in essence, who they are and what they're about. Certainly, that's something that the chamber can provide you a list. I'm sure that there are plenty of valid banks that are chamber members that can help you. But please make sure when you're applying for this kind of stuff that you really make sure and do your homework, that you know who you're sending stuff to and applying with. Absolutely 100% is valid and legitimate. If you need any information, additional information, you can certainly contact me. My email address is ian@businesscounselor.com, or you can reach me at 561-982-7800. I am a chamber member, and I'm ecstatic to be one now, a newly chamber member. So I'm happy to help in any way that I can. I'm happy to be a resource for you or anyone who you know that may need this information. These are national programs. If you've got cousins, if you've got friends, if you've got other individuals that are in other parts of the country and they need information, all of the information that you're really seeing on this slide presentation is available to anyone around the country. You can deal with your congressional offices, and that is the only website that you should go to for purposes of getting additional information, including your forgiveness applications, which is SBA.gov. And I leave it now up to you guys. I ran a little bit over our time period, or maybe we started a little bit later and I was on time, who knows? But I appreciate the opportunity of being able to speak again today. And I will always be available to you and your members for any kind of questions you might have or information that you need.
Thank you so much, Ian. We really appreciate all of your information from the beginning. I can't thank you enough for all the information you have provided us. We do have 2 questions.
Yep.
For Q&A. So I guess the first one is, I received PPP fund in May. I recently submitted an application for PPP2. I've heard that I should not submit my application for forgiveness for the first PPP until I get my funds for PPP2. Is that truth or myth?
No, first of all, you have up to 10 months after you've received and you've made your payments to apply for forgiveness. There's no reason why you shouldn't apply for forgiveness if you've already utilized the money. And there's nothing in the second round of PPP that means that you have to have an outstanding. You might as well get the first loan off your books, clean up your balance sheet, apply for your forgiveness, and then submit again for your second. Which you said here, it said a recently submitted application. So no, absolutely apply for your forgiveness.
Thank you, Ian. And we have another question. Can't you use the Form 3508S for loans under 150,000?
Yeah, the 35OS was really created, and if you look at the top of the 3508S, it basically says to be utilized for loans up to $50,000. So what you're primarily going to be doing is you'll use the EZ form. It's the 3508EZ. For anything that's under $150,000 would be the better form. They're both, I will say, under the new Economic Aid Act, the Congress did put in a special provision so that anyone who is applying for and let alone on forgiveness for up to 150,000 has streamlined forms. So, but you'll be using the EZ form related, the EZ 3508 EZ. Until they've come out with a new form, which they're always doing. That's the other thing, it's a great question to ask. There are many. If you Google a 3508, you'll come up with many different forms, okay? And I will tell you that there was a slide that I had in there as far as the amount of form changes. Most forms were either done 6, 7, or 8 times revised by the government. So what you want to deal with is you want the form correct. That is the 1/19/2021. It was recently released in January of 2019, and that's the one up to that you should be filing on any of the forms. And Andrea says for the 3508S states up to 150. If the new 3508S states up to 150, then you can utilize it for 150. But I know most of the ones that I've been dealing with recently are the EZ forms. So if the new form does have it on there, and I think I have it, to be frank with you, on my, although I don't think I can be able to get to my laptop while I'm sharing screen this way. But yeah, if the new 3508 on the top does say that it's up to 150 and everything is forgivable on it, then use the form for that way.
Thank you so much for your time today, Ian, and your broad knowledge. We really appreciate this. It'll be going out on YouTube. And if anybody knows anyone who would benefit from this, tell them to check out the Chamber's YouTube. Thank you, everyone.
Super. Thank you very much for the opportunity.
Thank you.
Good luck. Bye-bye.